All right, traders, welcome to this weekend's video. This is Christian from Hertz Tribeca Trade Group. And we'll spend a little bit less time in this weekend's video because I did put together a webinar on Thursday night where I went through more detail. I talked about some strategies to try to trade in this market where there's a little bit higher than normal volatility, and a couple strategies that I really like around this time. So we'll start with the S&P technicals. And then we'll go through a little bit of this week's option activity. Just keep in mind, this is always a very noisy time for option activity. You have a lot of trades that go up right around when a company reports earnings. Last week, the option activity was also, I would say, noisy, cloudy. Because you did have option expiration as well. So you see a lot of rolling of positions. What I normally do is just trade a little bit less during earnings season. I do have some catalyst trades on where I'm looking for some names to run into earnings, or I'm looking to play a group of names through a sector ETF. But really, for swing trading purposes, I'm not putting on large size here. I kind of want to wait to see how names report, and I want to wait and see where aggressive call buying shows up after a name reports earnings. Not into it's too much speculation. A lot of times traders, big investment managers are hedging their longs and their shorts, and they'll go ahead and put on a cheap option play. So it's very, very noisy. I try to kind of just ignore a lot of the trades that go up a couple days before or even same day when a company reports earnings. All right, so that's a little bit about option activity, but I will go over a few names, especially ones that have already reported earnings. So first things first, the S&P chart. I think this kind of looks like a lot of things, a lot of different areas of the market. I think it's very choppy. I think we're in a sideways market, and you have to be realistic here and just say, for me, I'm not putting a lot of money to work right now. I have a larger than average cash balance as I'm just kind of watching things kind of work their way through here. I think, just like we saw on Friday, I think from last week's price action, we had a nice move up here. I have got a downward trend line drawn, and it looks like we stalled out right there. I was saying after a couple nice days last week, the S&P, even with the move down Thursday and Friday, we still finished positive for the week. But my perspective was, late on Wednesday, I said, okay, we've had a nice little rally this week. Let's see if we can just hold and chop. Well, we actually didn't get that. We actually got more move to the downside. So you just kind of have to wait and see, and kind of wait for that move out of the this downward trend line, and also the moving averages. I thought it was some nice progress that we got back above all the short-term moving averages, but we fell apart. We're now back below the the 50, the 5. And we're just basically holding on to the 20-period moving average. Still above the 200-day moving average, which I think that is key for long term. But in the short term, we've got a lot of chop right now, and you're going to hear that word a lot, not just from me. So yeah, I mean, I think things. You could kind of look at this, and you could look at it one way and say, hey, we held the 20-day moving average. We're not that far from breaking back higher. All we need is a strong week to do that. On the other side, you could say, hey, these down days are really coming with a lot more. Seems to be a lot more conviction in the down days than the up days. Now, granted, we did have this one nice day, but it seems to be a challenging market. The IWM. So again, patience is the key here, and let it work its way out, and let these things kind of find the trend again. Small caps had kind of gave us a glimmer of upside. I don't want to say hope, but nice daylight. This rally too, but towards the end of the week, just like everything else, kind of fell apart again. And when we are having these washout days like we had on Friday, and by the way, we've been having a lot of washout days on Friday. If you remember back a couple months ago, Fridays were a really good day, and we were rallying a lot. But what we're getting now is basically, it just seems like people don't want to hold risk into the weekend for whatever reason. And those Fridays, the price action is really getting hit to the downside. And there's not a lot of names that you can basically hide in. So we'll talk about a couple other things. Bonds were a big topic last week. You could look at IEF, which is the 7 to 10 year, that now is back to the lows which we faced back in in February. So we're right back there. There are certain trades that you could put on to the upside. By the way, this is TLT, so this is the longer dated. Notice this has been a little bit stronger than that 10 year. Clearly that moved down pretty quickly, but I think everybody getting, starting to realize that yields are starting to go back higher. Now, it really depends on the day. One day you hear about the yield curve flattening, another day, which is a warning, bad. The next day you hear about is yields climbing. And so, it just kind of feels like, it's, I think, a little bit of over dramatizing what's going on here in bonds. It seems like every day there's something bad that's going on in bonds. So it is what it is. That's what financial media is focusing on. Yes, if you go back to the 7 to 10 year, it does look like things want to go lower here. Or keep in mind this is inverse to the yield curve. So you can look at, what is it, TNX, I think it is. You could see this is the 10 year the 10-year yield, and you can see this moving up. So there are things that you could do to play if you think rates continue to go higher. TBF is the inverse of TLT. You can see this is now back above the 50-day moving average. Pretty nice. And then you also have the move in commodities, which was pretty major last week. And there's two ETFs that you could focus on. DBB, which is your base metals ETF. You could see that is now in an uptrend. We did pop out of the recent high that we saw back in February, fell back down a little bit. And DBB is zinc, copper, and aluminum. And then also DBC, which is more everything commodities, has also been moving higher. And I think everybody knows that crude has been moving up. Notice we did hit this version point of control last week. These are really good for taking profits. Normally what happens once we hit this level of where a high amount of buyers and sellers have met up previously is we normally see either some digestion or a reversion. We can also see a move higher. You can see that there's another one up here in crude, which is right around the 76 level. But you want to see the price get above this purple line sooner than later. If not, there's the digestion, which we see a lot of times. All right, so that's what's going on in crude. A lot of the option activity the last couple of weeks has been centered around short-term call buying in energy names. There's a couple names that I'll focus on here. A lot of these moves have been very, very fast. And one thing that I found that's interesting, I'll go over a little bit of the ETF flows from last week, but this is the outstanding shares of XLE. So it's mainly like the hot money is in options. There isn't much really investment going on, even though despite the move in crude, the ETFs really haven't been seeing a whole lot of investment. In fact, they actually saw profit taking last week. So that's the same story in XLE, XOP, and OIH. And you can see again outstanding shares falling. So despite that move in crude, don't see any long-term paper kind of going after that move. All right, so a couple trades from last week in this space, which I think while these names are moving, I know some of them have moved so quickly, but the one that I'll focus on is Devon Energy. Just kind of tell you how I played this last week. First thing that we saw. Let me bring up the 5-day activity in Devon and DVN. And I'll bring up the chart as well. But the first thing that we saw is a really big May call buyer. I bought some of those. Those were swept. Those were bought. Nice May 37 calls. Those went up for 52 cents. I got in right around the same price, and I took targets up to I think $1. It was either $1.60 or $1.70. And then what they subsequently done later in the week. So I pretty much unwound that whole trade. And then what we saw after that was an October call buyer, and multiple times did we see the October 40s bought. So this is a perfect way to kind of manage your trades, and specifically your option trades. If you see short-term calls go up, for the most part, what I do is try to take those profits off pretty quickly if the name moves. It's, you know, in a May position, you know that you have big theta decay in front month options, which May is now front month. You know, you want to take that position off sooner than later, because you've got you've got big theta decay on that position, and then roll the position out. So regardless of seeing that big October calls, you know, I think rolling that position out and up. So I did exactly that. I followed what they did. The first trade worked really well for May, and we'll see what they're doing with the Octobers. And again, look at the size of the trade here: $2 million in premium in Devon Energy. And just at the, you know, I took this name as a counter trend trade. It was below the 200-day moving average. Well, now it's right at the 200-day moving average. And you could use that stop, you know, maybe set your stop a little bit below the 200-day moving average. And you could have that trade on, and we'll see where it goes. Keep in mind, again, they're going out to October, so that's plenty of time in that trade. Another chart that I think is pretty interesting, where we've seen repeat call buying, and I'm not going to go through each one of those trades, but RIG has exploded higher. It's gone from $9 to $12. You kind of have to take a step back. You know, if you've missed this rally, it's been a real nice, you know, move from that $9 to 12, and we've seen option activity, call buyers all along the way. But at this point, you know, take a look at how this chart looks like, and you could even look at the weekly chart and realize that it's a $12 stock. It's been basing for a long time. Now, they do report earnings, I believe, next week. So we'll see how the earnings report goes. But if it's still above the yearly value area, that 1176, I like along there. You know, again, you know, and it's a nice way to kind of think about a name that has already moved up decently. And you have a choice now. You know, do you want to try to get into a name that's already moved up decently, or do you want to just you know, stay away from it and realize it's made a big move? I think at this point, as long as you're defining your support, as long as your support is kind of close, then I think, you know, that's an easy way to kind of get into a name that's seen a lot of call buying, that has already seen a move up. But again, if you look at that long-term trend, you could see that this thing has been moving sideways for a long time, and may just have started to get going. So I would use 1176 as your stop. I do not have anything on in this. I'm kind of waiting for earnings. We'll see how that goes. You know, even if it's a, you know, not hopefully not really looking too much from price, considering I'm going to wait through earnings and then put the position on afterwards. So hopefully it doesn't move that much from their earnings report. All right, a couple other areas to take a look at. You know, I'll just go through the ETF fund flows just for 1 or 2 minutes here. There's a couple interesting notes, I think, from this. So, you know, the overall numbers from last week, just $3.3 billion of inflows. So there was a little bit of money put to work. International ETFs continued to be quiet, and, you know, going back to what I was looking at with the overall market and the S&P, you kind of see a similar pattern. And this is a weekly chart. Let's go back to the daily chart. You know, one of the things that, you know, doing a lot of looking at multiple areas, you know, not just in the U.S. but around the globe, and waiting for these things to kind of show some signs of life. They're not. Emerging markets is, you know, kind of stalled at this downward trend line. So again, you just have to be patient, and, you know, make sure that you've got some alerts set. But just not seeing a lot of opportunities globally either. You know, a couple other areas that I'm watching are India and the emerging markets, and they kind of stalled out last week too. So, you know, back to the 200-day moving average for EPI, the India ETF. If this gets back above, I think it looks interesting. Also, Brazil is another area that I've been watching. But again, below the 50-day moving average, pretty much a sideways looking pattern. So just not a ton of setups here yet. And again, I've said it now a few times, but I think you just have to be patient and kind of let this sideways action just wash through a bit. A few other notes here. This is what the sector flows look like for the week. You know, again, not a lot of investment. You could see actually money coming out of Energy, also a big outflow in financials as well. That was kind of both, that was mainly in the beginning of the week. We did see a little bit of money being put back to work in some of the banking ETFs, but very small. XLF was the big outflow in that group. Tech, which now Qs are now a part of this category, did see the biggest inflows for the week, despite that big move down in semis. And then I think what the most interesting one, and the one that I wanted to talk about, was industrials. They actually saw $717 million of inflows last week. I do find that notable. That's not something that the XLI has seen in a while. And we'll wait for this chart to come up here on the daily. So I think something to watch. You know, GE had earnings on, what was it, Friday morning, and they managed to rally. You know, a couple other big industrial names are reporting this week. Boeing reports, again, big name for big group of earnings that report this week. A lot in tech, but a lot of in various different other sectors as well. So these are all trades that we'll be going over in the trading room. We'll be looking at some names to play. Also, a couple of different ETFs. We saw a lot of Qs that traded on Friday just for this coming Friday's option expiration. So I did find that interesting as well, being that a big portion of the Qs report, you could see these 50,000 of the April 27th, 166 calls went up. A lot of those, this did not go up as a block trade. This went up in pieces throughout the day on Friday. So it looks like there was some bullish positioning going into, you know, Google, Amazon, Facebook reporting this week, and various others. PayPal is another one that reports this week. So I think that'll be interesting, and I think that's an interesting way to play the whole group. Another way to play the whole group, I got a lot of questions in the trading room about playing Amazon. Amazon reports, I believe, Thursday. So, you know, I usually like to put on call spreads going into earnings that don't cover the whole earnings, but the XLY ETF, the consumer discretionary ETF, Amazon is a 21% weight in this. And there's not going to be, there is not a big move up in implied volatility in that ETF. So possibly a way that you could play Amazon without paying for that expensive, option prices in the Amazon option price itself, or contract itself, I should say. All right, so as you can see over here in the international section, just not a lot of fund flows. Europe has now seen, I believe it's 9 straight weeks of outflows in ETFs. So the money just continues to kind of come out of this group. It hasn't. Last week was not as large as other weeks, but you could see $172 million. Plus, Germany also had some outflows. So again, not a lot of interesting points there. Fixed income, which has seen a lot of inflows the last week. The high yield bond group saw some really big inflows 2 weeks ago. Well, last week they all came out. The whole group, you can see HYG actually saw the largest outflow of any ETF last week, $1.6 billion of outflows. So 1 week they were bullish. This week, I think with the move in rates, in treasuries, they went ahead and maybe took profits on that trade. Big exits in the high yield space. Gold was pretty quiet last week. They have seen now 4 out of the last 5 weeks. Gold ETFs have seen inflows. The GLD did not see any flows last week, but the IAU, which is the iShares product, saw $223 million of inflows. So, one chart that I wanted to bring up here, not so much gold. The reason why I'm not going to talk too much about gold is because it's still choppy. It has not broken out of 1360 or 1370. So it just looks like chop to me. I think silver looks a little bit more interesting. Silver came out of the, rallied pretty hard a couple days last week and above the 200-day moving average. I did put on a trade in cash last week in the Wheaton Precious Metals not ETF, but stock. I think it's trying to get out of this downward range. We'll see what happens in this one. All right, a couple other trades, and that will be the end of the video for this weekend. We talked about Devon, we talked about RIG, NTNX. So I still like this group of stocks. I still like the enterprise application software. group. This name saw some call buying late on Friday, but I think it was mostly a roll from April. And you can kind of see how this trade went up. But this is a name that's now seen call buying a couple different times. So they are still keeping a trade on. You could see this one up right before the bell. If I can find the time here, 15:53. And they also did they took off the calls. They really waited till the last second. The April 52.5 calls, looks like those were taken off for $1.45. Yeah, $1.45. So it does look like they rolled some exposure. You know, the name has come in a little bit. I'm waiting for this name to come in maybe just a little bit more, and I think we'll set up for a nice long. But again, nice trend in this and a few other names in this space in the application enterprise software name. CCL, this is a name that already reported earnings, and we saw a nice looking call spread, pretty narrow call spread. It was, and short dated was the May 11th 67.5 call spread, just $1.50 wide. So they're not looking for a big move, but I like the chart. It's been in a downward trend. And it's just gotten over. And again, always look for names that perform well on a down day. This name was up well over 1% on Friday and closed on the highs. So I like that name as well. A gaming name that we saw a big roll of January calls, 30 calls to the 60 calls. So they took some money off the table. We've also seen some activity in some nearer dated calls as well. I think some Junes as well on Friday and last week as well. One banking chart that I'm watching. I like Morgan Stanley here. They had a real good quarter. I think they're best in breed in the group. You could see a lot of consolidation over the last couple of weeks. Not much of a move after earnings. I think above the 50-day moving average. I did structure a limited risk reversal on Friday in this name. Another name that I'm watching for next week, doesn't report for a little bit, is Grub. I like the price action. It's in value. It's also above the 50-day moving average. This thing, once it gets going, can really show some momentum to it. And then the last one is Blackstone. This one reported, Blackstone and as well as KKR both saw some big option activity going out to January 2020. KKR, which I actually like the chart better in KKR, but they report earnings. I think it's, if not this week, then it's next week. But they're both seeing a lot of call buying. I would wait for BX. It's on my watch list, waiting for that to get back above the 200-day moving average. Then you can use that as a stop. Until then, I'm just kind of watching those names because, again, they're going out pretty long term. So I'll wait till they look a little bit more constructive technically. All right, so that's it for the video for this week. Again, you know, this will be, I think, kind of the make or break week. A lot of earnings this week: Google, Microsoft, Amazon, Visa, Facebook. I could, you know, go off with about another 15 or 20 names. So I think this is best to kind of maybe have a couple trades positioning for some of these earnings names, but definitely to not over trade this week. I think the part of the problem with this earnings is that the expectations are high. You know, we've certainly seen what happened to a few names last week that did not report good earnings. They got really smashed to the downside. So, you know, we'll see how this plays out this week, and we'll have a couple trades on for Catalyst. So thanks for watching the video, and have a great weekend, or I should say enjoy the rest of your weekend. Thanks very much.